Global stock markets are in the middle of their worst stretch since the beginning of the pandemic, amid fears the global economy will slip into a recession. The sell-off started on Wall Street, where all major indices fell overnight. The biggest loser was the tech-heavy Nasdaq, which fell 5%. Investors have now lost some $8 trillion in wealth from U.S. stocks since the start of 2022. In Asia, shares in Hong Kong have retreated by 3%, and in Shanghai, prices are down more than 2%. Those hoping for better returns from cryptocurrency markets also saw a lot of red in their portfolios. The industry's leading token, Bitcoin, lost 11%, its biggest single-day drop since January. Meanwhile, oil prices continue to rise due to mounting sanctions on Russia over its attack on Ukraine. For more on the story, let's go to Danni Hewson. She's a financial analyst at AJ Bell in the UK. Welcome back to the program, Danni. Just what happened last night in Wall Street? Yesterday, there was a lot of optimism following the comments by the Fed, and they raised interest rates, but they weren't going to be as aggressive as many investors had feared. So what suddenly happened to make investors turn so pessimistic?
In a nutshell, I think it is utter uncertainty about whether or not the measures that the Fed have taken to curb inflation will actually work. The big drop came following the Bank of England's announcement that it was going to raise interest rates. And to be fair, it was incredibly gloomy about how the UK economy looked for the rest of the year, which really got investors all over the world concerned about how the global economy was going to look. And as you say, Wall Street, it just absolutely tumbled. And that fear gauge is way up on where we would normally expected to see it, which does suggest that volatility is going to be in place very much for the foreseeable future.
So central banks raising interest rates, that's directly related to the fight against inflation, which of course is soaring around the world because of the crisis in Ukraine and its effects on oil prices. On that front, we saw the oil cartel OPEC meet this week, and they're still refusing to raise their output by any significant amount to meet rising demand. How does that affect global economic prospects?
Well, we know that oil and inflation always tend to go hand in hand, and energy prices are a massive part of what is affecting inflation, both in the United States, the UK, and indeed around the world. OPEC said that it couldn't be held responsible for what is happening around the world in terms of people not wanting to take Russian oil, those sanctions which are being imposed. It also said, and this is really interesting, that it now wondered exactly what global demand would look like for the rest of the year, because China, of course, doubling down on its zero COVID policy, which has, of course, knocked the whole global system in terms of supply chains as well. So, yeah, OPEC very much saying that we're going to release a bit more, a trickle. But as you say, oil prices have risen once again. They are steadfastly remaining above that $100 a barrel for Brent crude, which many people this time last year were sort of looking at that and thinking, be interesting if we actually make that high. It's not got anywhere near where it was in March. But clearly, as the conflict in Ukraine continues and more sanctions are introduced, there are a lot of questions about the way that the oil price is going to go.
All right, Danni Hewson from AJ Bell in the UK. Thank you for helping break down the story for us.